What's going on? Ryan here. Welcome back. In this video, we are going to briefly talk about lagging indicators. So again, I got TOS loaded up. I got a chart. We're looking at the ES, and I have already loaded in some exponential moving averages. We have a period of 9, 21, 50, and 200. And important to realize that the lagging indicators are exactly that, right? They lag the price. So a lot of time when you're looking at lagging indicators, you're going to use them as confirmation, right, of things that are already happening, right? Because these these averages and the lagging indicators, they move based on previous price action, right? So again, simple moving averages, exponential moving averages, they're extremely easy to understand, right? It's the averages of the price over a period of time, right? Looking at the open and the close. And we can see this when we come into, for instance, an hour time period, that these moving averages are going to fluctuate. They're going to move, and based on what you're seeing, you can see that, like, okay, for instance, we can see that when these markets are trending up and the market is making a move, that these moving averages are going to stack on top of each other, right? And when the market pulls back, it might bounce off and continue to go up. But moving averages can be used as confirmation of trends or potential reverses, right? A sell signal could be where that 9-period moving average drops below the 21-day moving average, let's say, or looking at longer time frames when we're looking at like the 50-day and the 200-day, judging how strong, how powerful the momentum is, behind different moves and the different things that are happening. Okay, so important to know that lagging indicators like exponential moving averages, they're lagging price. Okay, now let's come in here to the studies, and we're going to bring up another, actually we'll leave those on, but let's also bring up the MACD, right? So MACD is moving average convergence divergence, and a perfect example, which we can actually see right here. So I'm going to grab a trend line and I'm going to draw a line on this moving average convergence divergence. And here's a perfect example, right? So this is a lagging indicator, right? It's based upon averages, but the way that it works is you have this yellow moving average, and then you have this trigger line, and then you have this histogram. And we can see that, for instance, when it's down here below the 0 line, and now that trigger is moving above the moving average, and now the histogram starting to become more positive, we can see that the trend is changing. We can see that this could be a chance to buy. Okay, it could be reversing. We also see that the moving averages are starting to stack, and then here, right here, they break out, and now this trend is kind of confirmed. But remember, this is lagging, right? But one of the interesting things, and one of the most powerful things about the moving average convergence divergence, is this right here, right? Where I've drawn this slope, and we can see that the peak here, where this has started to decrease, right? It's not making new highs, but it's actually decreasing, and it's sold off here, and now it's kind of bounced off of this moving average, and the trend is continuing higher, and that's where we would actually see the the convergence here. If we draw like a trend line here, let me draw a better one. If we draw this trend line kind of coming through this, we can see that there's a divergence here, right? Because this is going down, but the trend is still going up. And when you see this, this is precisely what this is used for, right? To anticipate or to confirm that a trend is starting to break and a reversal is starting to happen. And then, right, we see that once this actually breaks below here, that now this trend breaks. But then, we have this, if we get really technical here, we can see that this is actually like a reverse head and shoulders pattern, right? Where we have this neckline, we have one shoulder, here's the head, here's the other shoulder, and then a reversal. And we can see that on the MACD, that this trend is being confirmed to continue back up. Okay, so really important to understand, though, the leading indicators versus the lagging indicators. Now, again, in this technical analysis section, I didn't want to get too specific, right? Because I think that a lot of people can get sucked down this path of all these indicators and all these different things they're looking at, and it really takes away from understanding how options work, right? Because again, we don't need to necessarily be right about the market all the time to make money. And when we get to the option strategies, we're going to see exactly how that works. Okay, so I still, encourage you to just, read as much as you can, look up these technical indicators, look at other people's opinions of them, but don't take it too seriously, right? Take it with a grain of salt, and just be aware that all these things exist and that you have these tools to look at to help you with your decision-making process. Okay, so I look forward to seeing you in the next video.